Alrighty, good morning everybody. It is Tuesday, August 9th, 2022. Hope you guys are having a good morning here. I'm gonna go ahead and jump right into things here. Yesterday, really not much to talk about. I'll just quickly go through. The morning there was actually a really nice pullback right to 66 quarter, which yesterday, remember, was the high of the day before, which I believe was what, high of Friday. And also all this pre-market resistance right here at 66 quarter. This pullback here would have been a beautiful trade about 8 minutes after the open to take it long. But that was not called or anything, but just a beautiful hold there. And then once we got up here and we made this double top, this is when I notified everyone in the room that I was starting to get my first clues of some weakness in the push. And remember, the AD lines yesterday were very strong. Nicey tick opened at major extremes and was holding above 600. And then we got up here and I got some nice clues that the party might be over for the Bulls. And sure enough, that was basically it. We sold off from there. I did get a trade in myself here when we came back up to test those highs, and I still saw all my bearish signals. I went ahead and put a position on and rode the sucker down. Targets being the 200, the VWAP, and then down into 66. So a pretty good little sell-off there. And notice that when we got to 84.5, this was the first level yesterday. When we were before in our pre-market yesterday, I said, when we come up here, don't be surprised if we fail right from 84.5 or even 92 here. And sure enough, they came up into 84.5. And there actually was some decent play, holding off the top end of it. If I could bring this down, holding off the top end and then getting down below and then holding from the back end a few times. And then that was it. They came down, they came right back to 84 half there. And then the party, the bullish party was over and they sold off. So that was basically it for our morning, just calling out that bearish signal we were seeing up off the morning highs. And then the market went ahead and sold off. And I didn't call any specific trades, but that was a pretty good heads up. And then we can look and see the rest of the day here, pretty major sell-off from that point that we called the bearish signal. So pretty nice little reaction there. And we basically, let's just zoom out here, we basically almost retraced back to the lows of Friday. And now it looks like we're almost trekking right back down to the low of Friday, which was down closer to 07 half. So this is where we find ourselves here this morning. You can see in the overnight session, they tried to hold around 42, our major eye level, to hold things and bounce back up, but they went ahead and failed and came down right in front of 23 here. They just bounced at 23 half, our next minor level, and that's where we're at. So let's go ahead and zoom out and take a look at the daily. There's a nice, beautiful daily signal that printed yesterday. So let me pull this up. So remember, we've been watching a lot of these daily signals because in many instances, the daily signal leads to some very exaggerated pushes in the market. And so yesterday, what we were looking at was there was a bearish signal from, I believe that was bearish signal from Thursday's high. And then we said on Friday's low, there was a little bit of an argument, a specious argument for a bullish divergence from Friday's low, which could mean that we're going to attempt to break out to the upside. And what happened on yesterday, on Monday, is there was an attempt to break out. If you remember, we opened really strong. The advanced decline lines were at major bullish extremes, and same thing with the nicey tick. And so on Monday, we did get a push, but then remember I told you we found some bearish clues at the highs in the morning there, and then it failed. So there wasn't enough follow through to come up. And remember, that major level we've been watching up here is that 42.0475 high. Basically 03 to 0475 was our little region of expected resistance if the bulls could get up there, and they just couldn't quite get there. They fell just in front of that area. So who knows? I could definitely, I would not be surprised if the market literally just kind of chopped around and played around and then came up and tested that major high at 0475 and it got messy. That wouldn't be surprising to me. Not telling you that's exactly what's going to happen here, but wouldn't be surprised to see them kind of play around with this major swing high that we're coming up into right now. But this is the main thing I want to leave you with from the daily chart this morning. It has been getting a little bit tight and coiled up in this area, and we have been getting a lot of conflicting signals as things kind of oscillate back and forth. But it is what it is this morning from yesterday's high. We did get a nice bearish divergence. So again, assuming we get follow through here with this signal, I would expect this to now attempt to break lower, just based off of the daily signal. When we look down to the 4-hour, we get a nice agreement. Remember that yesterday we said there was a specious bearish argument on the 4-hour, and when that candle closed at 7 a.m., there was most definitely a very clear bearish divergence. So we've got the daily, we've got the 4-hour, the hourly is also in there off of yesterday's high. So there's a good confluence of signals that would typically lead a large push in the market. So this morning, that's going to give us a little bit of a bias coming into the open. Of course, anything's possible. There's lots of support levels. If they pull back, they could bounce off one and rip back higher. But that's what our signals are giving us here this morning. A lot more bearish signals from yesterday's high than anything else. Okay, so there's that. And now let me go to the 4-hour, and we already talked about the 4-hour bearish signal. But I also just want to mention we have the fib leg. Remember, all the way back from 39.13 quarter, back at the towards the end of July, all the way up to the high we made yesterday at 41.88. That is that leg. Again, if you look, you've got the major leg up from 13 quarter. Failed here right off our swing there at 16, pulled back, and then got this next leg up. And it's been a little messy in here, but now we've just made it up to this new high. So we've got leg 1, the pullback, leg 2. So leg 2 is this fib leg that I put up on the chart here. So we do have, remember we have our major and minor eye levels. We have major swing levels that we have marked. Now this morning, you're going to want to add that fib leg on there, 40.83, 40.50 half, and 40.18 quarter. These are 3 distinct fib levels that we typically see act as really good support or resistance, depending on which direction the leg is going. So don't forget about those 3 levels I just mentioned. And here's the thing: if the market gets very heavy and it starts selling off and breaking through all these levels, we need to consider the whole thing, right? All the way from down here, all the way up to the major high. So 88, all the way down, let's see, 41.88, all the way down to the major swing back here, which was 37.2375. If you remember, that 37.2375 was the exact shaded area we had for that morning, and we came right into it and got this major rip up. So if we start to really sell off here, we're going to want to consider the entire leg. And you can see that the 38% retracement of this major push from 37.2375, the 38% retracement is sitting here right around where there's a whole bunch of other stuff. We've got a swing high here. We've got the 61.8 retrace of the smaller leg. So a lot of stuff sitting right in that area. And that level is just about 40.11. So I'll just go ahead and mark it as a reminder at 40.11 that that's the beginning of the 38 retrace of the larger leg down. So let me move this over. Get 40.11 on there. And bring it across. Remember, these are just visual reminders on our shorter time frames that we are getting into a major retracement zone. All right, so that's it for the 4-hour chart. And now I want to get down to the 60-minute and we can talk about all the levels. So let's zoom in here. Get a nice clear picture for this morning. Right now, and I drew this on earlier before this candle was closing, we do have a little bullish divergence here from the overnight low on our 60-minute. So for whatever that's worth, we do have that there. Remember, there's a lot more bearish signals from yesterday's high than stuff we're getting down off lows here. But let's look at levels. So if the market, for whatever reason, does end up holding from 23, more importantly, you know something? Give me 1 second here. Okay, just wanted to get those on there. So we've already broken through yesterday's low at 29, whatever it is, 29 quarter. Yeah, we've already broken through there. So every level down below us, as you know, I don't really need to repeat myself, but these are all potential support levels as we start to fail back down. Remember that 4081 is that major level where we bounced basically to the tick off of it twice last week, and that was like the major weekly low. Getting back down to that level, once it breaks, is a nice clean shot right back down to this 58 area, and then this 50% retracement at 50 half. Okay. So just be aware of that. If the market gets down through 23 this morning, I would be targeting back to 07, back to 94, back to 83, and then 81 is going to be really important here because once that breaks, I think that's a really clear sign we're going to get a much deeper retracement. Of course, anything's possible, but I would then be targeting down to 58, like I said, 40.50, 40.42 to 40.44, another very important level there. Let me go ahead and extend this out for today and actually bring it out like a few days. And then if they can get through this, this is really a major area I'm watching. So we've got 81 and 40.42, two major zones I'm watching. If that breaks, then again, it's going to be one by one, but we've got 40.30, which is somewhat of a weaker level in comparison to everything else, but it's still something we want to be aware of. Then we've got 40.23, we've got the other fib level at 18, and then this is that little area. The next major fib is at 11. We've got some of these swings here at 06 and 16, and that fib level at 18. So a little smattering of stuff, and interestingly enough, right where we get kind of like a tightly packed area of levels, if you just zoom to the left here, oh look, it's right where there was a bunch of tightly packed price action, right? So once we come down, and I said once we get through 42 and we come down into this area, this is where we had major chop, and there's a lot of structure here. So this area might be a little messy. Let me extend these out. So let's bring these out to about the 12th. And okay. So once that zone ends up breaking, if it does break, then it's right down into these other minor eye levels and then our major fib, or our major eye level at 39.84. Let's look at what's going on above us, because just because we do have a really strong multiple time frame bearish signal from yesterday's high doesn't mean it has to sell off. The signals that we got are pretty much always there before there is a major move, but it doesn't mean that just because the signals line up that you're guaranteed a major move. We just know that when they line up like that, there's a potential for that to happen. So if it doesn't happen and the bulls go ahead and start ripping higher, and remember, a lot of times we get clues on our advanced decline and nicey tick as to what's going to happen. If they open strong and this thing starts to rip, obviously the first thing we need to get through is some of these levels up in here, and it is a little bit messy and choppy, so there are a few levels close together, but once we can get through basically 50% of yesterday's price action and they can get up through there and through 66, we're looking at potential resistance, obviously, right around the high of yesterday and right in this zone between 92 and 84. And then it's going to be a nice straight shot right up into, and remember, the major high up here, 0475, is that level that we're watching here. So once we get through yesterday's high in this little pocket, the next very, very important area is going to be 03 to 0475. If the bulls end up getting through there, remember our weekly, our daily, and our monthly will no longer show that potential bearish signal. So this is going to be a very important level to watch if the bulls end up getting up here, regardless of whether it's today, tomorrow, or next week. That's going to be really important. And then from there, it's just as we go. We've got our major fib line at 21.25 I've been talking about for weeks. We've got the minor levels, the major levels up above us here. And really, it's just one by one. Remember that these are all our major, if I zoom out a little bit, all of our major little structure zones. So we would expect there to be resistance off these levels and support as we go up. So that wraps it up for this morning. We've got a couple minutes until the open. Just to kind of throw it all together for you, a lot of bearish signals from yesterday's high. That would give us a clue that we should probably be breaking lower, although we have already pulled back just about, let's say 60, 65 points so far. So that might be it. If the low here breaks the overnight session, we've got targets here to the downside. And then if the bulls somehow are strong and they can get up through all this chop from the last 3 or 4 days of trading, we're looking at potential resistance here. And then if they break out, we've got our targets up above us. So have a great morning to those watching on YouTube. And we will be back here tomorrow as usual. Take care.